Hey, it's Bill Gross, the LA probate expert, and part of my business takes me to meet people in the real estate investing community. And recently, I was at Lloyd Siegel's LA Real Estate Investing Club, renamed now the Los Angeles County Real Estate Association, and met there Tim Sachs of Angulus Capital. And I was really impressed with his program, with his presentation, and some of the ideas he had wanted to share with everybody. So we've met and start talking about doing some business, but I want to kind of share him with you today. So Tim, welcome to our call.
Yeah, thank you, Bill. I'm grateful for the opportunity to join you on this call. Thank you so much.
So give us a little background. Where did you grow up, and then how did you get into mortgage lending?
That's a great question. So I grew up in the San Francisco Bay Area. I was doing simple jobs. I actually worked for my family at a meatpacking factory of all places, and really learned the value of a dollar there. And went to college and got a couple jobs out of college, and then started working for Deutsche Bank. And I had a 16-year career for Deutsche Bank. And I finished up there as the head of analytics for Deutsche Bank Fund Services. And primarily what we did is we provided administration and accounting work for hedge funds, private equity funds, and real estate funds. And the time came where I had the opportunity to leave and launch a firm of my own using the skills that I learned at Deutsche Bank. And so I jumped on that opportunity, and in 2015 we launched, and here we are in 2022. The market, why we chose the real estate private lending market is at the time it was tremendously underserved, and there was tremendous potential to deliver value for our investors while also helping our potential clients grow their businesses. And so it was a win-win across the board.
What Angulus Capital does, you have a niche. That's you're not a standard mortgage lender. You're really not kind of a standard hard money lender. You're kind of a hybrid, the way I see it, kind of fitting in kind of both pieces. Just describe a little bit what you guys do that's unique.
Yeah, great. We like to provide solutions for our clients, basically. In a fundamental sense, that's what it is. And primarily what we do is we deliver, we provide debt on their existing assets to help them achieve their goals quicker, right? And so a lot of times people need capital that it may take a while to get at a bank, or they simply can't get it from a bank for various reasons, not having to do with their credit or experience. It's just the environment that the banks operate in. And we're able to fill a void there and help our borrowers achieve their goal. Specifically, what we like bridge loans for fix and flippers. We like people that are investing in multifamily. Probate is also a great opportunity where we can help the inheritance to stabilize their asset and sell it on their terms instead of via fire sale so they don't have to rush and pay bills. And we also are in a rental market. So we provide a DSCR loan where the loan is based on the simple value that the property delivers. So what are the rents for those properties? It has very little to do with the borrower's credit. They just have to meet a certain credit score. But a property should stand on itself, and we deliver financing for that to create value for our clients.
Sounds like you're making loans in cases where there's a case for the loan itself, less dependent on the individual borrower.
In certain cases, and we also offer discounts for established borrowers with experience and with very high credit. But we do have solutions for everybody across the board. We want to help people that are just starting out, and we want to deliver value for those that are experienced.
So describe a little bit about bridge loans. I'm a primarily listing agent. I do work in the probate space. I get borrowers who find, I help my clients find maybe great deals, but the property needs work or it needs something, and they need to move quickly, and then they have refinancing down the road. So where's a bridge loan fit into that scenario?
Yeah, great. A bridge loan is a fantastic tool for someone, an aspiring developer or an ongoing developer, to acquire an asset, acquire a house, renovate that house, deliver value for the community, for the buyer, and get paid for their efforts, right? And so it's a short-term loan that is really tailored towards that goal of purchasing the house, renovating it, and getting a quick exit. So our bridge product is typically 12 to 18-month terms, and we like to encourage people to try and get the loan done and paid off in 6 to 8 months, actually, because that's where we find the sweet spot is for their profitability.
And so they're getting the loan and they're going to do the rehabilitation. And at the end of that, they're either going to sell it or they're going to refinance it, right? You're opening
Yeah.
a choice. You just need to get paid off.
Exactly. And we'll help them exit out of that. So we have products if they do want to keep that, keep the loan as a rental, or if they need help with introduction to listing agents to help them get out, we're here to serve as a resource for them.
Okay, great. And fix and flip, that's right up my alley. So describe kind of how does your fix and flip product work in the marketplace?
Great. So what's interesting with us is we've aligned with institutional capital providers. And so some lenders, some private lenders prefer to keep these valuable loans on their balance sheet or on their books, right? And in doing so, what they need to do is they need to charge a higher rate of return so they can pay off their investors and keep their investors happy. And our strategy is to be more aligned with institutional capital that actually has a lower rate tolerance. And so basically in doing that, we pass those savings down to our borrowers. And so what we do is we're a direct lender where we have our own pool of capital, but we're able to offer lower rates because eventually what we'll do is we'll sell that loan to an institutional investor and reinvest that money into a new loan. And basically that we're aligned with the institutional capital rates versus the private investor rates, which are typically much higher.
So on buying a fix and flip, how much down payment does an investor need to get a financing through you guys?
It depends on their experience. So we have products for a brand new investor with no track record, and typically that's 75% that we'll lend up to. And for someone that has 6 or more deals under their belt or completed properties under their belt, we'll finance up to 90% of the purchase and 100% of their renovation costs.
Okay, so experienced investor 9% plus 100%. The new investor 75%, and then what percentage of the improvements?
That's a good question. So what we'll do is we'll get an appraisal that values what their as completed value is, or otherwise known as after repair value, and we'll do up to 70% of that after repair value to that, and that defines what we can loan against for their renovations.
Okay, so for brand new investors, they're not typically finding properties at that price. Now, there's occasions that they do, but so I would think in order to make that number work, you're really talking about taking a property that needs substantial rehab money, but it's not going to be a whole construction project. You're talking about, rehabilitation, not reconstruction type loans. So imagine for the new investor still is not really in your sweet spot. You're looking more for somebody who's experienced, because those terms are great. 90% and 100% speak to most investors that I work with. They want to hear those kind of numbers.
Yeah, that's a good point. But I also have the attitude is we want to ensure everyone's success, right? And I'm saying insure as in Ian, I'm not insuring, but I care about the success of our borrowers. And so if someone has grand ideas to, have this very large budget and they have not flipped a house before,
right,
I would try to encourage them to do something very simple, right? And let's just get a simple house. Let's do a simple renovation, do a couple of them, and then grow from there. Let's take small bites first.
Yeah, it's funny you said. I run a full-time business. I sell 40 houses a year, and I have a team and some other things going on. And of course, my business, I find about 2 deals a year, but even there, I only take what I call lipstick flips. So I can, call the trash out company and Molly maids and put it back to the market with photographs. That's as far as I go. And I've done, 2 a year for the last few years, which is, made good money for me. But I'm a little nervous about getting deeper involved because I know that almost every first-time investor, pays a little too much. They underestimate the job a little bit, takes a little longer than they expect. And all that together can eat up, most or all their profit if they're not really careful. So
exactly. And the people that the new investors that we like to work with usually have the expertise on what to do and how to accomplish it.
Yeah.
They may not have the relationships to get it done in a timely fashion, or deliver it in a lower cost, at a lower cost. And so that's developed over time, right? and especially in today's world where sometimes there's shortfalls or shortages in labor, the new investor may experience some delays in getting their work done. And so over time, what we like to see is our borrowers or our clients develop those relationships with the subcontractors and the general contractors so that they're constantly giving them work and they can get a better service, and they have a better service model, and they can drive a better price.
The thing that really got my attention, I thought you had a nice presentation, and I think you come across as a very knowledgeable professional. I meet a lot of people that fit that criteria. I saw you at Lloyd's event make kind of an offer from a service point of view that if somebody had a transaction to evaluate, that you would help them kind of evaluate the model of the investment to see if it makes sense or not. So talk a little bit about that. How do you offer that as a service, particularly to new investors? Because you were in a room full of primarily new and aspiring or starting investors. How does that work that you're able to put the time in? Because most lenders, they just want a loan application, they want to write a check. They don't really roll up their sleeves and do that work. So describe that process for me a little bit.
Yeah, got it. So the first priority for us is to make sure that we're entering into a successful deal from the start. And so not only for us, but also for our client and for our borrower, we want to see them succeed. And so especially for a new borrower, it can be a very emotional decision to purchase a house, right? And I think what we're trying to do is we're trying to take some of the emotion out and provide some good numbers in the terms of a pro forma that really help paint the picture. Is this a good deal or not? Take the real estate and location side of it out, and let's just look at what the numbers are and evaluate from there. Obviously, the price will be reflective of the location, and so that's encompassed in the model too. And so basically, the way we can do this is we take some basic inputs. We take what's your purchase price, what's your budget, how long do you think you'll have the property, how long will you have it, what are your exit costs, what are your financing costs, and dump that into a model. And the model then looks at your tax liability, your property tax liability for it, and the amount of time that you're going to hold it, and will predict or project what a potential IRR is, or net profit too. And then you can take that and compare that with another baseline deal and really determine, does this loan or does this property make sense for you? And if so, if we're adding value, and great, and they go to somebody else, that's fine. At least we've helped somebody if they appreciate what we've done for them, and we'd like the opportunity to lend on that deal. But ultimately, our goal is to try and help these investors succeed and make their decisions.
I think it's great. I know one of my coaches in real estate philosophy has been Grant Cardone. Now he works more in the higher unit number multifamily, but he shares how when he evaluates a deal, he runs it by his partners, he runs it by his insurance company, runs it by his property management company, runs it by his lender. And if they all say it's a good deal, then he knows it's a good deal. If any one of them raise their hand to say, I don't want to do this deal, he knows there's a problem. And so I think to offer that to brand new investors, I was really impressed. I think that anybody starting out would learn a lot to both submit the file to you and then learn how you look at it through your eyes. And I find sometimes the new investors will disagree with me, say, well, this is wrong, that's wrong. I'm saying, okay, well, good luck with all that. And here you are as a professional, other people have trusted you with their money, and your input is extremely valuable. So I appreciate that.
Thank you.
And then the last topic I want to just kind of cover briefly was, I know on your website you have a lending fund that you, I guess, accept funds from investors, not as a fix and flip financer, or not just as that, but on the other side, you're actually lending money out and offering them a rate of return. Can you describe how that works?
Yeah, great. So to be a direct lender, we have to have a source of capital. And basically what we do is we add value for our investors. So they provide us with capital into our fund and entrust us to make the decisions. We provide them with the guidelines that we use to make our loan decisions, and then they let it sit and grow. And our returns for investors since 2015 have ranged between the high 6s to 13%. So we've been very consistent. I like to think that our fund is uncorrelated to the market, And so if the market's up or down, we're just trying to achieve a nice, steady, slow and steady growth there. Our first priority is preservation of capital and then generation of return, or otherwise known as alpha. So our role is we want to make sure we protect our investors' capital and earn a safe risk-adjusted return for those for that investment.
And are the funds going exclusively into your projects, or are there other investment vehicles you're using to blend to get to an average?
Great question, Bill. The funds are specifically for our lending vehicle. So we use those funds to lend out to the deals that we approve. What's interesting about it is I mentioned that we sell off our loans, right? And so really the exposure to any specific loan is limited between 2 to 3 weeks, and in certain cases up to 6 months. If I really like that loan and I don't want to sell it, I'll keep it on our books. But for the most part, we're really limiting the duration of that capital. So we're selling it off and we're getting paid back plus a little profit for getting the loan originated. And then we recycle that capital into a new deal.
And is that investment fund available to all investors, accredited investors only? How does that work?
It's open to accredited investors. And so we have to build a relationship with those potential investors. And if it's a fit, then we'll accept them into our fund.
Okay, good. So good to know there's another investment opportunity. And then along the way to make that money, if you want to flip properties, if you're looking for bridge capital financing for project working on, Angulus is another great opportunity. And I think the real value, as I said, I was at that event. I heard you make the presentation on the offer to evaluate deals with people. I thought, what a great opportunity, particularly for that first or second time investor, or third time investor who has a deal, they're stretching a little bit. What a great opportunity to get another opinion early in the process before they get too involved. So I thought it's great. Timothy, wanted to get together with you to evaluate a deal or to talk to you about that, or maybe they have a project to get financed. What's the best way to get in contact with you?
Great. They can email me, so I can be reached directly at tsacks@Angulus Capital, and that's spelled ANGULUSCAPITAL.com. Or they can call me at 949-415-4186. So you'll either get me or one of our associates.
Fantastic. Well, Tim, again, I appreciate, on behalf of people who follow me and listen, I appreciate it. And I think also on behalf of the greater LA area, real estate investors starting out, our community, I appreciate you offering the service and look forward to working with myself down the road, and appreciate your time today explaining what you do. So thank you so much.
And thank you, Bill, for the opportunity. It was nice to speak with you.
Thanks.
Thank you.